Hey everyone, good afternoon. It is 2:30. I wanted to put a quick video out in front of you so you can see the charts after today's action and give you some clarity on what it is that we're looking for, because every one of the charts that we are following is at a really critical juncture with a large move out of these ranges expected. So look at July beans, for instance. We're trading today the same level that we were trading last July. Okay, so right here is last August, right in here is last July. So we're effectively trading the same spot that we were trading almost a year ago, and we have been as much as $1 below this level, and we've been about $1 above it. So in 12 months, we really haven't done a whole lot on the July soybean contract, right? Even though it feels like it's gone everywhere and anywhere. So that makes these markets really difficult to trade. So what I've got in front of you here is a red box, and the way that this red box is drawn is off of the recent range of our hedge line. So from where this plateau happened to today's close on this hedge line, what we want to do is say, hey, anywhere inside or below this line, we want to be short. And the reason that that's so significant is because of these lows right in here, which have held us all year long. So if we're able to trade this contract back down inside outside of this range and break these lows, back down through today's low, down into this box, look what happens. We break this downtrend line, we break all of this support, and then I think down we go. On the other hand, if we work up and get higher, then I think we've got to move all the way on up. So the way we're thinking about beans is really simple. Above this red box, we want to own them, and below it, we want to get short. So you can choose your entry point. You can choose right here. You can choose all the way down here. Either way is fine. But the reality is that the quicker you sell them, the less risk you have, because the sooner you know where you're wrong, even if it takes a few times to get that right. So that's what soybeans look like to us. New crop beans are pretty much in the same boat. You know, it's real simple with new crop beans. You've got today's low, and you pretty much want to be short below that. Otherwise, you're holding the position above the or below the hedge line, and that's not really what you want to do. So so we'll have to see what happens. But today, beans look fine. I mean, they look scary for a little bit, but they ended up holding off and not breaking any harder than they or not breaking too hard. Here's July corn, really the same exact approach of July corn, okay? And I want to point out the significance of the top of this box where we consolidated before. It was right at this low right here that held on December 7th. So below that, you want to be bearish, and above that, you want to be bullish. Right now, we're kind of trapped inside no man's land, which is a 12-cent range. Anything above today's high or up outside of this trend line would be perceived as bullish, I think, and anything below this line would be perceived as bearish. Now, what's also the significance of these numbers? Well, you guessed it, it's our daily cloud, right? So out the top side of it, out the bottom side of it. The reason that we think that this is such an important area right here is because this represents 52 days. This represents 26 days. This represents 9 days. You've got a gathering of lots and lots of moving averages right here on corn. And whenever those moving averages tend to bind up, they don't stay that way for very long. So here we are. It's a significant point, and any move up and out of this range we want to own, and any move out the bottom side of it we want to sell. So we're on our toes here with corn. And wheat, I think, is going to go with it. We talked about wheat a lot yesterday. Today's action doesn't do anything to change our opinion on wheat. We still don't know. Yes, we recognize that wheat, that Kansas City Chicago spread is really, really wide, and that will probably narrow, but we're not sure why it will narrow or how yet. It still can be because Chicago goes higher, or it could be because Kansas City implodes, which is definitely how the market felt today, right? So we stepped in and bought wheat yesterday, right up above this low. Obviously, that looks bad today because it didn't work, and here we are right in the middle of our sell point at this juncture. So what we did to manage that trade was we sold $9 calls yesterday right at the close. What that did is give us enough premium that at today's low, it's a 4-cent loss with the premium that's collected. Now, if we reverse this and sell it and it works lower, then that position becomes profitable real quick. And even though you're holding a short call and a short futures contract, so that's kind of how we set that up yesterday. It's not really what we wanted to do, but you got to take what the market gives you, and you got to listen. So. But I wanted to give it today and a little bit of time to see if it could hold kind of this area right in here, because where else is this in relation to our cloud? It's right here, right? So we wanted to be patient with it. We wanted to make sure that it gave us an unequivocal reason to exit, which it almost did today, but not quite. Not quite enough to really jump on board. There's a saying that we say in this office all the time, and that saying is our hedge line is right and our least risk is to it. So now the question is how do you draw that hedge line? It plots itself off of a simple price point, but really it's broader than that because it trades from mid ranges. So whenever you see a cluster of prices like you see through in here, where it's consolidated for months on end, it's a pretty wide line. So we're giving it lots of room, lots of grace, and we try not to overtrade it because you'll just drive yourself crazy if you're trying to catch every time it crosses or moves above it. So nothing is absolute in this business, but eventually it becomes clear. So if wheat trades down here to 6, then we want to go with it falling out of this box. If wheat trades up here to 10, then we want to stay with it as it comes up out of this box. So and that's our plan, and it really is not any more difficult than that for any of our markets. We just want to stay with the position. And for those of you that are new to this service and to the way we think, remember your grain marketing is a process. It's not an event, and just because whether you're right or wrong on any given day is not relevant. What matters is where you are down here. And if we follow this hedge line, then over time we will be right. It's these long consolidation periods that absolutely suck to trade because they may have wide ranges, but they really don't go anywhere for months at a time. So we're either going to go higher or we're going to go lower because this consolidation is going to come to an end at some point in time, because a trend always follows consolidation periods, no matter, and the longer the consolidation, usually the longer the trend and the deeper it goes. So I think a move is coming, and I think it's going to be a big one. And today's bet would be to the downside, but it's not really definitive and not out of the woods on that yet. This is December corn. I just want to show you what it did. It didn't do anything to change our sentiment from yesterday that this is now in control, and anything below this level we want to be sellers of, and we want to stay hedged below that 576 level. So, all right, that's all I got for you today. Remember, there is significant risk trading futures and options, and you should only do so in light of your own financial condition. And you should be talking to people about what your positions are and how best to manage them, and get the help that's available to you as you come through. Remember, we have a new deal with the Andersons that we're excited to tell you about that will help you get into a position and be properly positioned for whatever is right for your farm. Talk to us about the solutions that are available. We'd love to share them with you. We'll talk to you later. Have a great